On behalf of all of us at Gabelli Funds, we've been privileged to partner with Morningstar for more than 25 years, and we're thrilled to be back as a principal sponsor at the conference again this year. I'm privileged to introduce John Belton. John joined GAMCO as a managing director for growth portfolios in January. He was previously a partner and research analyst at Absoluto Partners, a fundamental research-driven long-short equity investment fund, where he focused on technology, media, telecom, and consumer sectors. He started his career as a research analyst at Evercore ISI, focused on the media and technology sectors. John holds an MBA with honors from the Columbia Graduate School of Business, a BA in mathematics from Boston College, and is a CFA charter holder. With that, I'll turn it off to John.
All right, thank you, Janice. Nice to see everybody. So I'm going to talk through generative AI. I'm going to walk through kind of the history, a brief history of AI. How did we get here? Where are we in the investment cycle? Who are the players? Then I'm going to talk about how we're thinking through separating hype from reality in the financial markets. And then I'll talk about some of our exposures, and I'll open it up to Q&A from there. So there's a picture of me. Okay, so a quick history of generative AI. So a lot of skeptics, when I hear about generative AI and talk to skeptics, they'll say, AI is nothing new, so what's the big deal? And they're exactly right. AI has been around since the 1950s. We've been on a multi-decade journey here. There's decades of very successful applications, things like IBM's Deep Blue chess machine, which beat world champion Garry Kasparov in 1997. And more recently, things we're all familiar with, like Netflix's show recommendations, Google Maps, Apple's Siri, and even generative AI, which is sort of the latest phase in the development cycle, dates back to 2018 when Google invented the transformer model or the large language model. And all of this development has really been enabled, if you look at the top of the slide here, by advancements in semiconductor processor technology. So this chart shows on the y-axis a widely used metric called TOPS, trillions of operations per second. It measures the efficiency of a processor. And you can see it's in log scale. Through the 1990s into the 2000s, the industry had been on a pace of exponential growth. Progress had started to taper off a bit, and then NVIDIA developed a new architecture called the graphics processing unit and sort of returned the industry to an exponential curve. And we've now, thanks to NVIDIA, had 1,000x improvement in processor capabilities over the last 10 years. So yeah, AI, nothing new, multi-decade journey, but what is new is we had a big catalyst in November of 2022 when ChatGPT was launched. And I won't spend too much time here because we all know what ChatGPT is. It took 2 months for ChatGPT to reach 100 million users, so by far the fastest growing consumer application in history. It can ace the SAT, it can pass the bar exam, it can write you a Greek tragedy about the 2024 Chicago White Sox season, but we don't really need we don't need it to rub it in. So ChatGPT, I think it's safe to say it catalyzed a huge investment cycle, which is now underway. So starting with the corporate sector, I'll illustrate this point here by showing 4 of the largest tech companies, the 4 hyperscale cloud companies, Amazon, Google, Meta, and Microsoft, which are collectively expected to spend over $200 billion in capital expenditures next year. That's a 22% CAGR from kind of the pre-ChatGPT days. Big acceleration versus the pace of investment these companies were spending at before ChatGPT. At the government level, too, governments are investing heavily in AI. One example of this is the CHIPS and Science Act here in the U.S., a $280 billion program with a lot of awards and grants going towards semiconductor research, AI infrastructure, and semiconductor manufacturing capabilities. And so corporate and government sectors allocating a lot of investment dollars towards AI, and that's created this big inflection in a big investment cycle, which is now underway. So now let's talk about some of the companies that are benefiting from and are going to benefit from all these investment dollars. So when we think about the AI value chain, we think about it as existing on kind of 3 layers. At the micro layer, you have chip companies and server companies designing the machines that are running the AI programs and AI algorithms. At a middle layer, you have an ecosystem of companies that are providing the infrastructure for these chips and servers. And at the top layer, you have companies that are building consumer-facing and business-facing applications that are making use of the technology. And so starting with the micro layer, I think the broad comment to make here is as chip technology and chip architectures have become so complex, it's led to a very horizontal industry structure. And so you've got different companies specializing in different functions that go towards the manufacturing of AI chips. So you have equipment specialists, like on the top left here, companies like ASML and Applied Materials, which we own in our growth portfolios, that make the equipment that goes onto the semiconductor manufacturing line. On the top right, you have manufacturing specialists, companies like Samsung and Taiwan Semiconductor. Those are the two the two companies globally that have the ability to manufacture AI chips. At the bottom left, you have design specialists, NVIDIA, the one that I'm sure by now we're all familiar with, but NVIDIA is a fabless company, simply designs chips and outsources manufacturing. And then on the bottom right, server systems specialists, which package the chips into servers. So those are on this slide, sort of the key holdings we have at Gabelli at this layer. Next, at the infrastructure layer, this is basically an ecosystem of companies that come together to provide the real estate and the equipment which is needed to run the AI machines in the data centers. So, let's start with the top right here, the three major cloud hyperscale companies which own massive global networks of data centers which are made available to third parties as a service. So Amazon AWS, Microsoft Azure, and Google Cloud. On the bottom, you have a bunch of power management and thermal management equipment specialists which are providing equipment to the data center operators to help the AI servers run efficiently. And then on the bottom right, you have actually power companies, which are becoming increasingly important as AI has created this inflection in demand for power and demand for electricity, just as there's widespread decarbonization efforts underway globally. Power is being seen as a potential bottleneck for AI capacity expansion moving forward, and there's a lot of interesting investment themes on that front. So I think and then next, at the application layer, you have foundation model companies like Google Gemini, OpenAI's GPT, and Meta Llama. And then you have plenty of companies looking to make useful applications with the technology. And so I guess before continuing, I think I'd like to make the point that a lot of the large tech companies have irons in the fire at each of the three layers of the AI value chain. So here's sort of a summary of the so-called Magnificent Seven companies and sort of our subjective assessment of the efforts that are underway for each company at each layer of the value chain. I think clearly NVIDIA is the leader at the chip layer. The hyperscale cloud companies, Amazon, Google, and Microsoft are the early leaders at the infrastructure layer. And then it's a little bit harder to generalize about the application layer. But I mean, one interesting name to call out here is Tesla, which is, attempting to use AI to solve the very complex problem of autonomous driving. Okay, so back to the value chain. Next, we're going to go into each layer and talk through where we see hype versus reality in the markets. Where is the market, pricing in future earnings growth versus where is the earnings growth already happening? So starting with the chip layer, I mean, I think it probably is not that big of a surprise to most of us here, but a lot of the early leaders in AI chip at the AI chip layer have already seen their fundamentals inflect. NVIDIA, the obvious example, I won't belabor the point. I would say NVIDIA, since NVIDIA's revenues this year are expected to grow 500% versus 2022, and their EBITDA is expected to grow 800% versus 2022. The stock is up 700% since the end of 2022. So, the valuation discussion on NVIDIA is It's not the time or the place here for that, but I would say that objectively, you could say that earnings growth for NVIDIA or the stock price appreciation can be explained by the magnitude of earnings growth. ASML, a second example. I mentioned we own this company in our growth portfolios at Gabelli. ASML makes the single highest value piece of equipment that goes onto the AI manufacturing line, the extreme ultraviolet lithography machine. Without this machine, AI chip manufacturing would not be possible. Similar to NVIDIA, you had a business that was growing nicely in the early years of the pandemic that really inflected over the last couple of years. And in the fourth quarter, just as an example of sort of the sharpness of the inflection we've seen, ASML's orders growth was reported 400% above Wall Street's expectations. So big magnitude of outperformance and big inflection in growth. Taiwan Semi, a third example at the chip layer. Again, chip layer, the AI is already showing up in fundamentals. You had a business that had nice growth into the kind of the pre-Chat GPT days, which has accelerated nicely thereafter. Moving to the infrastructure layer, the broad point I'd make here is the infrastructure layer, it's still a little bit earlier in the investment cycle, but AI is clearly starting now to show up in company fundamentals. First example I give is Microsoft Azure, which again runs one of the largest global data center networks, which is made available to third parties. And in those data centers, AI services, basically offering AI compute. It was basically a new business, less than 2 years old. It's already annualizing at a several $billion revenue run rate. So just a several $billion business spun up from zero in a very short amount of time. Not going to move the needle yet for Microsoft as a whole, for a company of that scale, but clearly real fundamentals behind AI at the infrastructure layer for Microsoft. Vertiv Holdings, maybe some of us haven't heard of this company, but it's a slightly more niche example, but Vertiv is a specialist in thermal management equipment for data center operators. And in particular, they specialize in a new technology called liquid cooling, which is used to cool servers in the data center. And many people think that the next generations of AI servers are going to need liquid cooling to be able to run properly. That legacy air cooling techniques are not going to work because of the power density of these servers. Vertiv, like Microsoft, has very recently seen their fundamentals really inflect. So in the latest quarter, Vertiv reported 60% year-over-year growth in orders, and their book-to-bill ratio blew out to 1.5 times. This is a company that, for context, targets growth in kind of the high single-digit range. So, massive inflection in growth for Vertiv, which really just happened. And finally, moving to the application layer, the broad point here is it's still very early in kind of the fundamental cycle for application companies when it comes to AI. So 2 slides here at the application layer. The first, I highlight some products available from incumbent companies, which are seeming to use AI to try to bolster and strengthen their core businesses, and in many cases, use AI to justify price increases. I think, again, it's still very early. A lot of these modules are brand new, have not really started scaling yet. I think these magnitude of these price increases signal a healthy degree of confidence from these companies that they are going to benefit from AI and be able to monetize it, but it's still early. Similarly, on the startup side, we have a bunch of really interesting new companies using AI to solve different use cases. It's still, again, very early, but a couple to highlight here. Harvey is a company that's using AI to basically do the work of paralegals for law firms. It's a multi-billion-dollar valuation company. It's just 2 years old. Tempus is a Chicago company, recently IPO'd, and they are using AI to help physicians analyze clinical, molecular, and genomic data. And they IPO with a several billion-dollar market cap earlier this month. So again, application layer, it's still definitely earlier than the chip layer and the infrastructure layer, but we're pretty encouraged by some of the early results. It's going to be very crucial to watch this layer progress because this is going to be needed to keep the investment cycle going. Back to that point about some of the large tech companies participating in AI at each layer of the value chain, just a couple examples here. Microsoft. Microsoft is designing their own AI chips called Maya. They have their global data center network, Azure, and they have a suite of applications as well, including Copilot, which is going alongside the core Office suite of applications, and it's helping automate different Office applications or different workflows within Office. Amazon, same concept. They have two families of AI chips, Trainium and Inferentia. They have a global data center network in AWS, and then they have a suite of generative AI applications, things like Bedrock, which is an application to help developers write generative AI programs. And then extending this concept to our portfolio at Gabelli Growth, I think we really like the chip layer. We think AI is one of a few reasons which is helping semiconductors become more of a secular growth space and less versus what has historically been a very cyclical growth space. Infrastructure layer, yeah, we like that it's still much earlier in the cycle, but that there's tangible results behind a lot of these companies. And then again, the application layer, it's earlier. We're encouraged by some of the early results. We're definitely monitoring that moving forward. But yeah, hard to say that there's been such sharp inflections in fundamentals there as there have been at the other layers so far. Selfishly, I sometimes worry that AI is coming for my job. I think that personally, I've been trying to use AI as a productivity tool. So I do things like I brainstorm with a chatbot when I'm writing a quarterly letter, or when I use a chatbot to help me automate some aspects of writing an investment memo. I'll even use AI applications to help build basic valuation models or help pull data, things like that. I think so far I'm finding it as a complement, a tool, a productivity tool. I am definitely talking my own book, but so far I don't think AI can pick stocks better than humans yet. Let's hope that continues. So the kind of couple thoughts to conclude here, 3 points. First, the investment cycle we think is still in the early innings. The pick and shovel companies, particularly at the chip and infrastructure layers, we think are going to continue to benefit, especially in the near term. I think at the application layer, but really at every layer, AI is something that is going to make the incumbents stronger. Good companies will find ways to have AI make their businesses stronger. It should improve core products for the incumbents. And then the third point, mentioned this earlier, but again, we're early in the cycle at the application layer. This is going to be a very crucial layer to keep this investment cycle going, because at the end of the day, if AI just turns out to be cool but not that useful, the investment cycle is going to roll, and a lot of this enthusiasm that's been priced into the markets is not going to end well. But we do think it's early, we do think it's promising, and we have a lot of examples and signals from companies that are very encouraged by everything they can do with AI. Couple of really quick comments on Gabelli Growth. So I think that discussion is a decent microcosm for sort of how we think about investing, and sort of sheds light on our investment process at Gabelli Growth. We like to think about the world from a top-down perspective, but we build our portfolios from the bottoms up. So similar to the value side of our firm, we are very much fundamental bottoms-up stock pickers. We are heavily focused on quality companies. So we like revenue growth, high margins, good returns on invested capital, strong balance sheets, good capital allocation policies. That's all things that are absolutely crucial for all the names in our portfolios. And then the final point here is we typically, our funds are relatively concentrated. So our growth fund has about 30 names, and our global growth fund has about 40 names. And then these are sort of our products. So we have a growth fund, GABGX, large cap growth, a large cap global growth, GICPX, and then we have an actively managed ETF, Gabelli Growth Innovators Fund, with ticker GGRW. And with that, I'll take any questions. Yeah. Go ahead. Yep.
Noticed that. Sorry. I noticed that Vertiv was a company you're pretty high on, but it wasn't. I don't think it was in your portfolio.
Yep.
Is that mostly from a valuation concern at this point?
Yeah, so I think we do not own Vertiv. We've spent a good amount of time looking at it. I think what gives us a little pause about Vertiv is valuation, and I also think it's early to know exactly what sort of technological edge Vertiv has in liquid cooling. I think that's going to be a pretty crowded market, particularly if it turns into as big of an opportunity as companies like Vertiv think it's going to be. I think HVAC companies are going to go after that space. I think power management companies are going to go after that space. I think Vertiv is very well positioned, and when we're watching closely, we're just looking to maybe get it at a better price. Yeah.
The actual valuations?
Yeah, so I think there's the question is basically like previous hype cycles. There's always kind of initial hype followed by disappointment followed by recovery, and I think that's a lot of people liken generative AI to the .com era and kind of the start of the internet. So I think a couple points would be one, there seems to be more fundamental support for stock price moves in AI beneficiaries today versus what we saw in the kind of .com era. So I think, just as an example, one, I think I've seen this point made 100 times, people comparing NVIDIA to Cisco. NVIDIA's valuation multiple, walked through this earlier, but it has not really expanded that drastically, if at all, since before this whole boom took off. And if you look at Cisco in the .com era, that is complete opposite case. Now, that's not to say that I think for NVIDIA stock to keep working, you're going to need to see the fundamental momentum continue, the investment cycle continue, and you're going to need them to prove that we're not just in this big inflection of demand that's going to roll. But I think that's sort of where we get comfort, is that there's real investment dollars behind here. It's a little bit less speculative for a lot of these names right now.
So a lot of the hyperscalers are also designing their own chips to run AI workloads. Is that a threat to NVIDIA? If so, why hasn't it been priced in at all yet?
It's a great question. So so the question is I guess you could hear him because he was on the microphone. But so companies like Google is probably the leader in this area. They have a family of AI chips called TPUs. And then I showed Microsoft, Amazon also designing AI chips. Tesla has their own AI chips as well. So it's a common theme. So I don't think any of these companies are necessarily coming after NVIDIA directly. And I think actually one of the companies that partners with these hyperscalers on designing the chips is called Broadcom. And they reported earnings last week, and their CEO was asked this exact question: are you competing with NVIDIA? He was very clear. He said, no, we're trying to do something a little bit different. So what I think these hyperscale companies are trying to do with their custom AI chips is they're trying to do some of the less mission critical workloads on their platforms. They're kind of trying to use it as more of a internal cost savings, not as a substitute for what NVIDIA does.
Could you talk a little bit about Taiwan Semiconductor? I don't think you guys own it, but political risk and such.
So Taiwan Semiconductor, one of the most impressive and best run companies in the world. We do not own it. Again, Taiwan Semiconductor is one of two foundries globally that has the ability to fabricate AI chips alongside Samsung. Taiwan Semiconductor is, depending on various estimates, 3, 6, 9 months ahead of Samsung. So they really are undisputed the most advanced manufacturing company in the world. We don't own it. We feel like we own some of Taiwan Semiconductor's most highest value-add suppliers, companies like ASML, and their highest value-add customers like NVIDIA. The reason we don't own it is geopolitical risk. Not to say Taiwan Semiconductor's manufacturing facilities are by and large located in Taiwan. They are now expanding outside of Taiwan, including in the US. So that is hopefully a risk that gets diversified away over time. But that is the reason we have not owned it and instead participated in the same sort of themes in other ways. We would love to own it if that risk wasn't there.
Wonder if you can comment on AI adoption. It might be coming in the later innings. If and when it might happen, I'm wondering when you might see that. Intuit, Adobe, Salesforce are often mentioned as early adopters of this, but we're seeing mixed results from them.
So yeah, AI adoption, and I think this kind of speaks to the application layer that we talked about. So I think there's plenty of examples of companies that have been using AI for years to improve their core businesses. So a company like Meta being one clear example, they're using AI to help their ad targeting, and that has had a very clear positive impact. Now, explicitly monetizing AI is, I think, maybe more so the question you're going towards, and there's a lot of efforts that are recently underway. So Adobe being one example of a company that they built their own foundational model called Firefly, and they're attempting to, they've created a new generative AI product in Firefly, and they're pricing it separately from their core business. We haven't seen a lot of traction with these products yet. So I think the general comment would be AI very clearly is being used to improve core businesses, and in that process is helping companies do things like take price, so they are getting returns on these investments. But AI as standalone products, it's still a little bit earlier there, admittedly. So we're watching that closely. So
on NVIDIA, obviously you talked about the exponential growth in the revenue. If we're looking over a 3 to 5 year period, you mentioned the competitors coming online. AMD is obviously a worthy competitor. How about the uncertainty around the margins over the next 3 to 5 years? Does that give you any concern about like the wide range of possible outcomes there?
Yeah, I mean, I think revenue growth and margins here, there's some push and pull for NVIDIA, because I think there's a lot of competition coming for NVIDIA, and their margins have massively expanded as AI has taken off, and they have an enormous amount of pricing power. But one thing that NVIDIA can do is they can also get into some of these competitors' turfs as well. Like NVIDIA could start doing more custom chips, and that might be a lower margin product, and I think NVIDIA's margins, and they've been clear about this, they've sort of hit a local peak, and I think they will probably contract a bit from here. But my sense is, and our view is, NVIDIA has so many opportunities that exist outside of the core GPU product, including custom silicon, including networking, where they have a lot going on, including data center infrastructure as well. Some of those things may dilute the overall margins, but it will be very accretive to profit growth, which is ultimately what we're concerned with.
I think we have time for about one more question. If there's one right here.
So I didn't see any cybersecurity companies on that list, but maybe you can speak to the use of AI for companies that may be on the periphery, whether they're in cybersecurity and other areas.
So I did have CrowdStrike up there. So yeah, and we own CrowdStrike. I think companies like CrowdStrike, they have AI products. They've been using AI for a long time to detect threats and to combat threats. I think the other interesting thing for cybersecurity companies is AI, for better, well, no, definitely not for better, for worse, is helping the bad actors here. So I think AI is sort of a new driver of secular growth in the need for cybersecurity. So I think it's in a perverse way, a good thing for growth in the space. And then I think the strongest companies like CrowdStrike are already using it to their advantage as well.
Thank you all so much for your time. I think we're actually running over our session here, so we're going to have to cut it off. But we'd invite you all to come back to our booth. We're on the other side of the Morningstar Center, and John would look forward to visiting with you throughout the conference. Thank you for attending and your engagement.
Thank you very much.